So I'm gone a couple days, and the market goes down a little bit more, and then it has a great 2-day rally, but somehow I'm being blamed for it being down 11 handles, folks. We are off the lows of the move. Christian and Dennis are going to tell you if it's going to hold, but better yet, 8:35. Statman do Ryan Detrick, Carson Group. He'll be coming in there with all those statistics to let us know where we're going. Let's get things going on this Tuesday. Pre-market prep comes at you right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Let me get my charts up here, get back into the groove of things. First of all, we are trading the June contract, quad wedge expiration coming to you this Friday. That should be a lot of fun. But we're down 13 and 3/4 handles off the high, off the low from yesterday by quite a bit. Let's see if we can go green and stay green. The buck steady here, 103. Ooh, quiet consolidation here after a big sell-off. TLT, it just seems to be stuck between 90 and 92 over the last couple of weeks, up a couple pennies, 90.64. USO at the top of its, let's call it 8-day trading range, up 68 cents, 73.39. GLD, eyes for new highs, up 251, 279.01. Silver, the laggard, trying to get into the 31 handle, up 9 cents at 30.90. A little triple top there so far in silver. And Bitcoin, what's going on with Bitcoin? Down $1,990 at 82,620. Let me remove my charts. We'll bring in I got another D to add to triple D. Come on, Dapper. Dennis Dale Dick. Look at you, man.
Nice shirt, new haircut.
Did you shave too? Did you shave too?
I did yesterday. Yeah, look at me.
Yeah.
Look,
Woo.
all prettied up for you guys. I tried hard here today. And the guy who's always prettied up, Mr. Christian Fromhertz, it's always looking good.
Good morning, guys. Good morning.
So we finally found the Sarepta news. Everybody, there was rumors it was a patient death. That wasn't confirmed, but Adam Fierstein, who's been on this show many of time in the past, has just tweeted out it is confirmed there was a patient death. Note, Adam has tweeted this, and I just retweeted it as well if you're looking for it. But Sarepta Therapeutics, leader in precision genetic medicine for rare diseases, share the following safety update related to Elevidys. I think that's how you say it, the only approved gene therapy in patients with Duchenne muscular dystrophy. We are profoundly sad to share that a young man with Duchenne muscular dystrophy has passed away following treatment with Elevidys, having suffered acute liver failure. Acute liver injury is known as possible side effect of Elevidys. So he's dead. That is your news there off of the side effects from obviously taking the drug. And the stock is getting hammered here this morning, is now down 21%. It is 1.94% of your XBI. So if you're wondering why XBI is getting hit a little bit harder in the overall market, that is your answer. Sarepta had been in the gutter here, drifting down. This obviously is not good news here at all. At one point in time, the stock was up over $180. Even earlier last year, or later last year, 173. We now have a 2-for-1 stock split. It's hard to buy stocks when patients, obviously, have adverse from side effects and somebody dies. I mean, I'm probably staying away and not going to try to be a hero and pick the bottom on the first day. But going to throw you guys under the bus here on Sarepta. Thoughts?
I hate to give a lot of comments on when something involves a patient
It's
death,
tough,
right? Yeah.
for
So I'll just give one level, and it's only one level on a monthly, and it's from December of 29. So if you've been waiting to buy this, it's 78.67. There you go. You're trading $79. But like I said, there's only one monthly low there. So can't really comment on the deaths, and it's a sad thing, but there you go. Biotech companies, these things are going to happen. Christian,
The
I'll
reason
throw it
we
to
started
you.
with that was, again, because the news wasn't widely out there. And Adam Fierstein just tweeted out a few minutes ago there. So that is your headline from Sarepta. So moving on from Sarepta into this overall market, thoughts here. I mean, we've got Nvidia Day here today. That obviously is going to be a driver. You know, everybody's going to be listening to Jensen Huang talking at 1 o'clock. We have Fed Day tomorrow. That's going to be a driver here as well. And then we always have the volatile speech coming from Donald Trump. So lots of macro still driving the bus. But Nvidia, we should start there. It had a nice bounce running yesterday, not so great. It was up in the pre-market, doing well, what you would think ahead of the event, but some early selling. And today, same story. It's having a little bit of early selling here, so people aren't too excited about this. You know, you talked about potentially maybe people taking the profits because the stocks come from 104 to 120 and basically the snap of a finger since Joel's been away. It's been a good pop here. Christian, what are your thoughts on Nvidia going into today's and the next couple of days big event?
Yeah, I'm afraid that it's going to be another. Good morning, everybody. I'm afraid that it's going to be another sell the news type event. I think that the expectations are a bit lower, but I just remember what happened to the stock back on the last their last big event, which I think was January 7th, which was a big red candle. So again, I'm not saying history repeats, but I'm really watching this 119 level. And we'll see if that sticks for the day. But I anticipate some volatility while he's speaking. I believe it's 1 o'clock Eastern is when he speaks. So yeah, again, I think that the expectations are a bit lower. But this is a big. Whenever there's this type of event, it's not just going to be important for Nvidia, but so many companies in the AI space. And we've seen a big move down in that AI trade and in tech, which has been has underperformed. So I think this is a big day for that group of stocks. Just to kind of rewind a little bit too to yesterday's price action. Up until that 130 big buy program, I want to know what you thought about that. If you saw that, Dennis, yesterday, but there was a pretty big buy program that stepped in around like 1:30, 2 o'clock yesterday and went on for about an hour. But prior to that, most of what I saw that was actually working really well was a bit more of the low volatility equities. Insurance companies were I'm astounded at how many insurance companies look good. Also, energy companies look very good. Commodity companies look good. So, what did you think of the trading action yesterday?
Well, Statman do Ryan Detrick tweeted out, which is interesting too, just from yesterday's trading action, 90% of the S&P was trading higher yesterday, 9-0. But he also tweeted out that the average stock was up only, or that with the S&P's gain of only 0.64%, that was the lowest gain for a day where 90% of the stocks were trading higher. So they were all up just a little bit. And he said that was the lowest gain since 1980. This guy just finds these stats, man. I don't know how he finds this stuff. But, in basically 45 years, that like going back 45 years to find a gain that low with that many stocks trading higher. So the breadth was excellent. But there was no stocks like just blasting off and leading the charge yesterday. Everything was up a little bit. Like you said, Christian, and a lot of sectors up. Like sometimes you see energy move the opposite direction sometimes of the S&P, but stocks kind of all moving together. Consumer staples were up. A lot of things were up together. So maybe everything coming together here before the Fed meeting on Wednesday, but stocks all kind of moving together to a certain extent. It's something new. It's something we haven't been seeing, where stocks are all moving together and these 90% of stocks being up days. But I still think there's a lot of unknowns, and I'm of the opinion, and I know Kramer said, he thinks the bottom's in. Of course, Kramer thinks the bottom's in because we bounced for 2 days. But I'm still sticking with what me and Christian were saying yesterday, is I think there's a window here. I think there's a window for stocks, but I don't know how far they can go. But we know April 2nd, reciprocal tariff day is coming. The market will start to worry about that stuff again. It's very important what it's very important what Nvidia says today, but even more important what the Fed says tomorrow. So we have a lot of information coming. So I think we've got to get more information before really making market calls. And making a bold statement like saying the bottom is in, because I think that's a reach. I think if reciprocal tariff day doesn't go away, I think the bottom's going to get retested. If he makes a deal and says no reciprocal tariffs, then no, that obviously can be a driver for the market. But the main reason why the market has been going up the last few days is probably Trump's been a little bit quiet. He was golfing. He won a golf tournament yesterday. He tweeted out. So, I mean, when he's golfing, the market seems to go higher here. When he comes back and just starts, bulling the China shop and tearing everything apart, that's when the market starts going down. So more golf for Trump is better for the market.
I was just going to
You
add
know what?
really
I got Nvidia-itis.
Okay.
I like you guys are making like this big thing with Jensen Huang speaking and everything. I disagree. I disagree. I mean, you'll
Okay.
say something and you'll get some temporary move, but you know, right now this chart it's not broken, right? Because it's been in a major uptrend, but I just think there's too many things going on that put so much emphasis. I mean, it's earnings report. Well, everybody. I mean, there's so many other things. There's inflation. There's unemployment. There's tariffs and everything. I mean, you may get a couple comments or something coming out of this that are going to move the stock, but we all know AI is coming. We all know it's a ways off. And I just think there's too many other things to focus. I mean, I'm not tired. It's a good trading stock. I know you've been talking about day trading it and everything, and it does, need to regain its footing. But what I'm looking at technically here, you got down to 105, you got almost to 119. I don't know if this is going to be like a hot, the high before it checks back. But I like if this pulled back today to like 114, 115, giving back half of this rally, it's supported, held there for another couple days. But the Fed meeting tomorrow, I think I think Nvidia, it is a leader. It is the major stock that people follow, but it's been in a nauseating trading range since September, and it just tested the bottom of the trading range. So I think we got to look. We got to look to other factors besides what this Jensen Huang says. At whatever it's the 1 o'clock speech today. You guys,
Oh, I'm just stuck here looking at
sorry.
Nvidia and thinking I got a 50% check back. So I'm kind of with you, Joel. I don't think this is going to be like the Nvidia event that bails this entire market out. I think the market's kind of telling you that ahead of time here too. So maybe he says something that the market's really going to like. Maybe he's going to say,
Again,
demand's still
nothing
off
to
the
change
charts.
my outlook on the market. Nothing that
I
Jensen
think you're
Huang is
right.
going to.
I think you're right. I think it's going to be we're not in the market where Nvidia and tech is driving the bus anymore. So
Nope.
I think you're making a good point that this Nvidia conference is probably not as important to the market as it would have been 3 months ago or 2 months ago or even 1 month ago. I do think certain stocks that get mentioned are going to move. Quantum stocks likely to be mentioned. We know there's a quantum day on Thursday, so I mean, that can be a catalyst for those names. So some individual names can move. Can Nvidia bail out the entire market here? I don't think so either. I think it's going to depend on the Fed tomorrow.
Yeah, I would just add, I mean, that's the whole thing. I mean, since we've had the 10% correction is what stocks are going to be your leaders. And, I think that given AI has pulled back so much, the whole AI trade and, not just Nvidia, but a lot of the semis, the power companies, then of course the quantum names. Like, I think that this is a possible trading situation where if Nvidia does not deliver, you're not going to see those names hold in well. And I think that the potentially could be a short if they don't mention anything positive. So that's kind of where I'm going with that. And just further, I think looking at what happened yesterday, that RSP, the equally weighted S&P, was up 1.35% yesterday, and the Qs were only up about 0.8. So I'm actually I'm welcoming the chance that there could be different leadership, but it's going to be, hopefully it will be something of what we saw yesterday, where it's just more groups participating, because I think that AI it needs something else. So that's why I think it will be. I think it will be important for that group just because it doesn't have a catalyst right now. So if he happens to say something new, maybe those stocks revive. But I think ultimately those stocks are not looking great, other
And
than a
here's
bounce the
another
last couple
thing.
days.
And Christian, to your point that you were making on the pre-market show, the chart that you were showing, I don't know if you can grab that chart in the background, Christian, while I'm making your point here, but you were talking about, allocations. And, something we've been talking about on this show for the past couple of weeks is Europe makes a new high yesterday. You've got China breaking out, making new highs yesterday. You've got emerging markets, which, obviously I bought, a lot of emerging markets recently here on that dip, making new highs yesterday. You have other markets, even Mexico, which is ground zero for the tariffs, making a new 2025 high, the EWW yesterday. EWC in Canada, not getting hit nearly as much as I thought it would. It's bouncing all the way back. So as much as the US has been the best place to be right now in 2025, it has been the worst place to be. And this chart here, explain this one, Christian, because this is a good one.
Well, this is a report that that Bank of America Merrill Lynch puts out. I think it's monthly. It's called the Fund Manager Survey. Gives a sense of like what funds are doing. So not just retail traders, but larger funds, and they survey their investors, and what they're looking at is the positioning that's really changed over the last month. And we've seen it in the charts too. But it's kind of interesting when they put some numbers behind it. But look at the Eurozone, the positioning.
Mm-hmm.
So. And I think that this is, when you look at emerging markets, is just put in here as EM, which has also seen a big change. But investors and funds have really kind of gone to some other places where it's a valuation perspective. I think you can make up various different reasons for it, but you could see overall U.S. and you could see tech is not far from there, from the last red bar on there. So I think it just kind of really shows you what has been some of the themes outside of the U.S. Over the last month, which I think is pretty notable.
Yeah, and so it's a concern. And I think the international investor, is what I've been saying too, has been very concentrated in the US for the past decade. We know emerging markets have underperformed. We know Europe has underperformed. We know all other markets have really underperformed. The US has been the best place to be. So, I mean, as much as, Trump wants to again, right now, so far, it's not working. And again, it's the volatility of him just coming in. Some of these ideas that Trump has may be good ideas, but you can't come in and implement them all at once. The market doesn't know what to do with this when you're just blowing up the government, you're tariffing everyone, you're going to take over other countries. The market doesn't know what to do with this. So that's why I keep saying Trump golfing right now, the market likes it because it can relax and breathe. He comes back in and starts tearing everything apart again. The market can't breathe. And, not saying being a Trump supporter, Republican versus Democrat, none of that. Take that all off the table, because we don't know. Maybe some of these policies are going to work in the long run. But in the short run, it just adds so much uncertainty here. And the one thing we can certainly say is the market hates uncertainty.
The TGI, the Trump Golf Indicator. I like that. We got another indicator. But Dennis, game fame here. Nice stats, but it's been the worst place so far. Buy the dip, baby. Maybe there's a reason to buy here now. And
well, maybe. I think if you're buying the dip, I think it's probably back in those names that have led the charge. Like not Tesla. That was not, I can lead into that, but like the Nvidias, like the stocks that are going to be on the AI movement, because the AI movement is real. Nvidia is going to be the cornerstone and the centerpiece for it all. So there are names that maybe you should be shopping with that are coming down to more reasonable valuations. I think Nvidia on a forward basis is trading like 26 times forward earnings here now. So if you think, again, there's a risk of pull forward, that those earnings were higher than they're going to be because there was so much pull forward, there is a risk of that. But if you think that's not the case, I mean, Nvidia 23, 24 times earnings, Amazon at 25, 26 times earnings is as cheap as these stocks have been in a long time. Christian, what are your thoughts? Are you diving into some tech names here yet, or are you still waiting, and just to see, what materializes here for more information?
Very selectively. I bought some Okta last week on the dip. Again, I'll try to stick to growth. I went in to to answer your question. I dipped my toe in two names last week, and I was a little bit. I think that was on Wednesday. That was Amazon and Broadcom. Amazon, because I thought just it had seen a good enough dip and it was into some support that we outlined last week. I have since unwound that Amazon position because I'm just seeing better opportunities out there. I get like Amazon is a big name. I think they're a leader, but look at they've barely budged off the
I
lows.
know that's a
And
scary looking chart
so
right
so
there.
I cut that. I was like, I actually put on I replaced that with the defense name. I replaced that with what's the name? HWM, right? Which is a defense name, and those
Aerospace.
names have been acting better. I'm
Yeah.
still long some Broadcom, but Broadcom saw a lot of call buying, which I thought was interesting, another dip, but this thing doesn't look
I know
there's some
they
news.
those. It
Yeah,
looks like they're going like this, like
yeah. So I might have to abandon that trade. There was a story out that was out yesterday, but getting a little further attention that Google is diversifying away from Broadcom chips. So that's not the news that I wanted to hear theirs. But just to sum up what you were saying, like it's very selective, I think, in tech. So I'm looking there for opportunities, but I just see so many better groups right now.
this
Let's
190. I mean, look at that. If you're looking for a check back and you think this is like a generational low here on 180, yeah, 180, roughly 200. You're pulling back to 190. You think this is it. You don't care about these two huge red candles back from the last 2 months. So there you go. There's a look. That's already given back half of the move. So that's a look at Broadcom. The other thing too, Dennis, I know you're going to switch to something else is the money's going where the governments are spending money, right? Germany is coming out with this big. They're catching on. Our monetary policy that we had for several years while we're pulling back. So the
well,
money's
there's a great point there too. I mean, we are, the U.S. It's higher rates. They haven't been cutting. Canada's been aggressively cutting. Other countries are cutting rates, getting the monetary policy going. Sorry, but it's not only that, it's the fiscal policy here too. Right now, with all these government cuts and everything, like the fiscal spending sounds like it's actually going to be going down. So, I mean, you got two things to stimulate from government spending, fiscal and monetary. And when you get all these government cutbacks happening here, it sounds to me like, we don't obviously know exactly where Trump's going because he changes his mind very, very often. But I mean, government stimulus here isn't something that sounds like it's immediately in the cards here either. So there's definitely some issues there as well. And then arguments to be made that maybe you should be investing some money outside the US. And which brings me to the Tesla versus BYD. And if we look here again, Tesla down again today, has no relative strength whatsoever. And Christian's informed me that's what's called relative weakness, which is absolutely true. It's down another $7 here today. I mean, we can find headlines if you want to find headlines. They're not good. What is going on at Tesla is not good stuff here. This right now, this move that we've had the last 4 days looks very eerily similar to what happened in February, where you had the big down move early February, then you had the check back around above 350. We had 4 or 5 days above 350, got a couple upgrades, in there. They were trying, analysts trying to buy the dip, and then the whoosh. We look like we're doing the same thing where we just kind of check back for 3-4 days around 250. We know we had Dan Ives pumping the tires a few days ago, which helped. And now we feel like, we're starting to whoosh down here again. We know the reasons. I mean, it's political. You can say all you want, oh, it's the refresh. And, the cars aren't there and Model Y and the next model's coming and people are all going to run and start buying those. It's not, folks. I'm sorry. The reasons are what we cited back in January, why I turned and sold the majority of my Tesla position, because you could see the political viewpoints were damaging Tesla's brand. I want to read from JP Morgan here yesterday. There's a JP Morgan note that came out that sums it up pretty much perfectly here. JP Morgan says, We struggle to think of anything analogous in the history of the automotive industry in which a brand has lost so much value so quickly. Boom, bingo. That's the problem. The brand damage here. It's not just Republicans versus Democrats. Like, I mean, Tesla's absolutely hated in Canada, but we know we're seeing the sales come in from Germany. We're seeing the sales elsewhere. And it's not only that he's damaging the brand, he's doing it at the worst possible time because competition is intensifying here. And Christian, you were talking about BYD and their battery, information that they released yesterday. BYD is absolutely killing it in China. They are now, I believe, the #1 EV maker. Can you just give us some stats on their new chargers here?
Yeah, and this is pretty interesting in terms of being like innovation. BYD has taken a huge step closer to making EV charging as easy as filling up with gas, and that could be a major problem for Tesla. This is coming from Bloomberg News. The China EV giant unveiled the new fast chargers on Monday that says it can add 400 kilometers of range to an electric vehicle in 5 minutes. 5 minutes. That's so, think about how fast you can fill up your car with gas. BYD's new 1,000 kilowatt superchargers are 4 times as powerful as Tesla's 250 kilowatt chargers. With Elon Musk's automaker says it can add 200 miles of range in 15 minutes. So there you go. And Tesla has plans to roll out 500 kilowatt superchargers this year. So, that's a big jump in terms of innovation.
So if you're trading BYD, it trades as an ADR over here. It's BYDDY or BYDDF. So 2 choices there. One's probably more liquid than the other. I don't follow them that closely. Yeah, I
Dennis,
believe
I have
the
a question for you.
Yeah.
BYD and the
Yeah.
symbol. What does BYD stand for? Oh, sorry.
Yeah, so I was going to ask the chat. We'll
Sorry.
throw this out there. What does BYD stand for? I found out last night. Pretty cool what it stands for, actually. I did not know this. Does anybody know what BYD stands for? Somebody in the chat's going to know that. Correct. So it's coming there. Build your dreams. Build your dreams. It's pretty cool. I did not know that. There it is. Build your dreams.
Sorry, I screwed that up. That was Dennis asking us, which is a really good question. Nobody knew the answer, so
I just
really
found
good
out
trivia.
last night. But I'll tell you, let's just do some fun comparisons here. So, I was a big Tesla bull all last year. And if Musk wouldn't have went, and tried to destroy his brand actively here, I would still be a huge Tesla bull. But even at these lowered prices, Tesla's market cap is $765 billion. BYD's market cap, just for fun, let's go look at BYD. Its market cap, $156 billion. So you're talking about a company that is 20% of the value of Tesla only, except they make more EVs than Tesla. And they're working on humanoids. They're working on a whole bunch of stuff here too. So I pose this question to the chat. I pose it to whoever wants to answer. Is BYD the new Tesla? Big question today, because I've been a huge Tesla backer up till 2 months ago.
I also got a question on this, and I'm sure everyone knows it. Who's a huge investor in BYD?
That's a good question.
Chat? Let's go to the chat. I'm sure the chat knows this.
I'm asking.
I just saw it. Nope. Jay Diamond got it. Buffett.
Is Buffett in BYD? He is.
Yeah.
Yeah, you're right. Warren Buffett is. Rick, that guy, man. He just knows the stuff.
Get him on the show.
Right, here's another
him on the
question
show.
for you guys in the chat. Do they sell vehicles in the U.S.?
I don't know if they don't sell a lot, so I don't know if they do. Does BYD?
What are you asking ChatGPT AS?
Yeah. No, BYD currently does not sell in the US. So that would also help with the tariffs. They don't have to worry about the tariffs, BYD. They don't impact them whatsoever. They have no sales in the US. None. That's interesting in itself as well. That's a market that they get them to expand to. So BYD, are they number 1? BYD electric vehicles. We're just going to see. Vehicles. Are they number 1? Sales. Somebody said they were number 1. I want to verify that. Yeah, BYD is the top EV maker, surpassing Tesla in 2024. So they make the most EVs in the world, yet they don't sell any even in the US. There's room to expand there, obviously, maybe not with Trump in there and the tariffs and stuff, but we got to think about all these things. This is just interesting. So Buffett's in there. I mean, BYD, the one issue is the stock has been running. The stock has been running. I think you need a check back here now. I guess we should have been, when we were getting off the Tesla bandwagon, we probably should have got on the BYD bandwagon a month ago, and it would have been really, really good. But I don't know. What are your thoughts here, Christian? Is this something you'd look at, BYD on a pullback? Kind of looks like a Christian Fromhertz stock.
This is a tough one to trade. I'm just, besides this, and I know this is in the news this morning, but I think overall, just China has been really well. It's been doing really well. And I've got positions now in 3 different China names, including the KWEB ETF. So I'm probably at this point a little bit too overweight China. I have a position on a KWEB. I've position on Baba, which acted really well yesterday. I added some JD when they reported earnings. And then I've got a small position in another name that's called HSAI. Very small position because I'm not that familiar with the name, but it acted really well yesterday. So BYD I think is I have never traded BYD before, but I'm open to it at this point.
I'm putting it on my watch list. I don't think I'm chasing it here today, but if you get, an overall market sell-off again, maybe on the next check back there. I know just a couple of weeks ago you actually had a market sell-off. Maybe on the check back, you put this one in your shopping list here. So it's on my shopping list. I want to pull back, though, on BYD.
All right, should we stick with the China theme here? Let's do Baidu here. Making a nice move yesterday, follow through today, waking up with the rest of the market. I thought I saw they did mention the old AI, which is an old trick, but a good trick here. Dennis, I know you've been following this one for a long time. Is this a rally that's going to stick for Baidu?
This is the problem. I've been in Baidu for about a year. If you've listened to the show for a long time, I've been a Baidu promoter, and I've really been a believer that Baidu is one of the most undervalued AI plays out there, along with Alibaba. Baba has been running and running and running. Baba had a fantastic day again yesterday, Christian. I know you're still long it as well. Is Baidu have a catch-up trade here? It's trying. It's trying to do some catch-up here. Now, my average cost basis is 91 on this. I've been everywhere with it. I ran it up to 114. I did sell a little bit into that rally, and then I rebought some more around 91 again. Then I went down to 77. I'm like, do I have this story this wrong? But it just goes to show you, as long as you're not playing options and you're playing equities, if you really believe in the story, sometimes you can just stick it out, and I've just stuck this one out. It's one of the biggest positions in my long-term portfolio, and it's starting to pay again here now. The question is what you just said, though. Does it stick? Because it seems like every time Baidu gets a solid rally, it doesn't stick. The forward PE on this thing is 10. Which is basically a joke. But if you can believe the numbers, I mean, always with China, it's always about, can you believe the numbers? Gap accounting isn't over there. So, they could be, ways of doing things differently. But, if you believe the numbers, again, this is one of the cheapest stocks out there.
Boy, oh boy, Dennis, don't sell this one. Don't think about it.
You tell me when to sell, Joel. You tell me when to sell Baidu. Chat, you guys tell me when to sell Baidu too.
Never. Give it to your kids. Yeah.
This is what Joel does. He's like the Warren Buffett of pre-market prep. He holds forever. He has stocks in there from when he was like 10 years old and delivering newspapers.
No, not 10. Not 10.
You have a lot of. What is the longest stock you've had? Let's talk about like something you
I
bought
don't even know.
when you were a little kid and you're still holding it. He's like one of those.
I don't know about that.
But he's got a core portfolio that he just never sells.
I don't like to look at it, but actually Warren had sold some of his BYD. No, Dennis, just forget about it. Just at the minimum 160. Okay? How's that? At the minimum 160. I mean,
what's the biggest position in your long-term portfolio? Do you know?
Cash.
Of course, his acronym was all short, so that kind of makes sense here.
Yes.
Okay, what's the biggest stock holding in your long-term portfolio?
The big
you know? Do you even know? He never looks at it. He doesn't even know. Give us a couple big names.
JP Morgan.
That's a good one.
From the banking crisis.
Morgan. You probably bought it when you told me not to buy it.
Yeah, okay.
Yeah. What are the other ones?
Unfortunately, I've had Merck for a really long time.
Yeah, it's
Really
been a
wanted
dog
to,
lately.
but I mean, I've
You
had
got
it
some
for.
tech names in there?
Lisa has some Microsoft.
Yeah, I consider Lisa and you the same. You're the same part of the same team. So Lisa's portfolio is your portfolio as well.
Yes,
I do the
yes.
same thing with Laura and myself. We're all part of the same team. We're going up. So if Laura owns it, I consider that I own it too. So at least
And
she's
the
got
other one that I tried, I really wanted to dump and I wanted to put some things on. And the only reason is because of the 99-cent hot dogs is Costco.
you got a
I
huge
even
position in
told her
Costco
that I
too.
put that in my acronym for
Just
short.
now.
And I did it, and it didn't even. I couldn't even phase her on it. It did, but it's probably back to where it was. But I don't know. That stock, that red candle right there, that scares me because that's just a shot across the bow right there, right there. That last month candle right there.
There's a lot of candles that look like that, which
I
makes
don't
it
like it.
scary. Like Walmart looks the same. So, we just go in these consumer discretionary stocks. XLP kind of had an ugly candle too, was recently where everybody was hiding out. And then bang, 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 3 days gives back a month and a half of gains.
Check out
But
sorry to interrupt, but
yeah,
check
no,
out
interrupt whatever you want.
BJ Wholesales. That's been out of the group. That's been showing some nice strength. That had decent earnings. And I like this name. Again, it's from a valuation standpoint, much cheaper than a Costco. Even though I love Costco and have been holding Costco too for a long time,
Yeah.
but BJ Wholesalers is cheaper.
That matters right now. It's a great
It
point,
does.
Christian, because the market is hot for lower PE names. It has been this year. 2025, even though it's been an ugly year for a lot of people, has been the year of the value investor so far. It has been the year where lower PE names are doing well. It has been the year where cash-like stocks like AT&T are doing well, bond-like stocks, I mean. So I think there's a good point you're making there. Like sometimes these stocks are trading 40 times earnings, do have checkbacks. And sometimes these stocks that are trading 10 times earnings or 12 times earnings or 15 times earnings do have checkbacks. So keep that in mind. This market is still hot for cheaper stocks.
And then also with just going back to the Tesla, when that went down, it went down for a year. It went down for over a year before it bottomed when it got over 400. And then it went to everyone thought it was going under 100 and it didn't. So, I mean, if it's going to following that same trajectory here, maybe late 2025 or early
I'm not even
2026.
thinking about Tesla at this point in time because he needs to stop killing the brand. Let's bring in Ryan Detrick. Ryan's in
Is
the
he?
background here. Statman is here. He is ready to rock. Let's bring him in.
DJ Ryan Detrick. We all know him from the Carson group. He's here to talk about the NCAA basketball tournament.
Yes. Good morning, guys. Thanks for having me back. Great discussion there. I am where I went to Xavier, right? Xavier University here in Cincinnati. So I got my X on. I am a huge Ohio State fan of football, but the funny thing, and didn't, you guys might like this. Joel, you might like this. I hate Ohio State basketball because it's like this rivalry. I don't know. I love the football team, but I hate the basketball team because I'm a Xavier boy at heart. And Xavier plays tomorrow night up in Dayton, about an hour away. So a bunch of Xavier fans are going up there to beat Texas. It would be funny, though, if Ohio State beat Texas in football and then Xavier beats them in basketball. So that's tomorrow night. But I'm excited to be back. And I was on CNBC at 5 o'clock this morning, which is 3.5 hours ago. Feels like a day ago. I took like a 2-hour nap after I did it. So I'm all spun around. So I think I was a minute or two late jumping on here with you guys. But I'm excited to be back. I've got a ton of charts and a ton of stuff.
Yeah.
I'll just start sharing away. Let me pull this up. How you guys doing? Everybody hanging in there so far? I mean,
Yeah, we're good. We're good.
I won't talk about Michigan being a 5 seed. We'll
that's
save that for later.
that's the 5-12. That's San Diego State. Tell you that's upset
Ryan,
special. We'll see.
Are we going to talk about breath today?
Yeah, we're gonna do that too. Well, I swear we're talking about market stuff here. Here we go. There we go. You guys see it? Worked again. You see that?
Bringing it up right now.
All right, should be there. I hope. Did it work?
I think we're there.
Perfect. Okay, good. So hopefully you see the screen. It looks like it's sharing on my end. Just a fun, playful one. Hopefully everyone had a happy St. Patrick's Day. But St. Patrick's Day historically is one of the most bullish days of the year, most green days of the year. Played out again. But what's fun about some of this stuff, and I know I've shared like literally this chart a lot with you guys the last couple of months and honestly couple of years. The first quarter of a post-election year is not that great. It's not about red. It's not about blue. Sometimes you're a little excited after the election. You got a new person in power, maybe the same person in power, whatever it is. There's just some choppiness, some potential weakness. I mean, Dennis, you pointed out, kind of some of the, I think in a way you were saying low vol's doing better, right? I mean, you think maybe some of the cheaper stocks, but low vol's doing really well. I mean, this is the Sesame Street word of the day. Word of the year is diversify. If you have a diversified portfolio, you're not doing that bad. Now, I know I'm not a trader. I know a lot of traders come on on your show, which is great. I mean, but if you have a diversified portfolio, you're not really doing all that badly this year with Europe up a lot, like we know, China up a lot. Bonds are finally acting like bonds. Oh no, by the way, gold's hitting all-time highs. At least it was up 1% a couple hours ago when I was on TV. So you've got some things that are doing well. But just to know coming into this year, early in a post-election year is not that great. Early in a year after you're up 20%, like we were last year, like we are now, not that great. The first quarter of the last 20 years, pretty weak historically. I got a chart come up on this one, though. But just the stage was set, I think, for some choppiness. No, we didn't think we had one of the quickest 10% corrections ever. At the same time, I'm not overly surprised by this. Here, good, this is the next one. The last 20 years, you bottom on March 12th on average. I mean, you don't blindly invest in this stuff. I get it. And a lot is skewed because, obviously, the pandemic in 2009, sure. But the reality is reality. Well, so far, we bottom on March 13th. Now, I know we don't know if the bottom's in, but I think it might be. And I'm going to say why here in a second. But that's kind of amazing that we bottom virtually the same time. And I know I came on with you. I was on CNBC with Judge on, I think it was the 16th of February, right? And everyone thinks I'm like this Super Bowl. And I'm like, get ready for the banana peel. So the stage is set probably to shake out some weak hands. That's what I said on CNBC with them. And then, boom, here it is. And now I'm out there literally over the weekend saying we probably just hit a low if we get some follow through. So we'll see. Believe me, I've been wrong a lot in my life. But, so far, those calls have been okay. And that's the things we're stressing to our advisors at the Carson group. Now, I'm getting a little technical, but I know this is kind of what everyone likes here. You tell me there's a chance. We did a 61.8% retracement, right, approximately, of the August lows to the recent high. You've got the what is it? I guess it was the July peak, right? I said if we can close above that July peak from last year by this Friday, to me, maybe you had a little false breakdown, but now some reversal. There's some areas of support, and with the over-the-top negative sentiment, which I'll talk about, I will say, good, it's this one here. So the last 2 days, right? The last 2 days, trading days, Friday, Monday, which been pretty weak this year, honestly, but not so far this time. More than 90% of the S&P 500 components were higher the previous 2 days, okay? Yesterday was shocking to me because we did have 90% higher, yet the S&P was up only like 64 basis points, one of the weakest days ever. That's because the Mag 7 lagged. Well, that's nothing new, right? Okay, Mag 7 was down, but virtually everything else was higher yesterday. But you see it on your screen. I mean, it's one of those, it is what it is. What happens after back-to-back 90% breadth days? Well, pretty good stuff. The S&P's never been lower 6 months later, never been lower a year later. A month later, okay, well, those are actually pretty good returns too. But the bottom line is, did we just hit a major low? Who knows? But I think we might have. I mean, all the sentiment was so over the top, and then the buying thrust, right where the support is, right? Everyone got bearish. And by the way, and I love the guy, so I don't want to call him out, but Ed Yardini is like this big Super Bowl. Ed's been very right. I read his stuff, big fan. He kind of waved the white flag on Thursday. Said the Trump put is kaput, lowered his guidance, talked about cutting GDP, all this stuff, and it's still bullish, okay. But I was looking around, I told our team, when one of the biggest bulls is saying this, we're probably really close. We're probably really close. And then we have a historic 2-day rally in terms of breadth. I mean, isn't that interesting how that played out? This is the stuff I talk to advisors about. So for traders, maybe not as important, but I think it's neat to know. Your average year does pull back 14% on average. Okay. I mean, it is what it is. 23 of the last 45 years pulled back at least 10%, peak to trough at 1 point. All right. 13 of those years finished higher by an average of 17%. The crazy thing to me is when I look at all these corrections, if you go into a correction or not, there were 12 times the stocks in general went into a correction, but did not go into a bear market. So sometimes you go into a bear market after correction. We don't think we will. 5 of those times, incredibly, 5 of those times bottomed the day it went into a correction. So that'd be like Thursday. So it's normal to tell me the chance, Lloyd Christmas, to bottom the day you go into correction. 5 of the last 12 times it happened. So that's a pretty good sample size. So just some context to think about. And here it is. I looked at 48 times you had a correction since World War II. You went into a bear market 25% of the time. Trust me, that's the big question that our advisors are asking. We do not see this turning into a bear market. Honest to goodness, like I laid out, maybe we're pretty close to the pain being over, and maybe a little more upside. What else do I have here? This is one of the fastest corrections ever from an all-time high to down 10%. 16 trading days, right? From
Wow.
peak to the low. So that's darn fast. What does it mean? Small sample size, yes, but if there are more examples, I would have used them. But you guys see the same thing I see. 6 months later, never lower. Sound familiar to the other 90-90? 6 months later, never lower. Like I share these on social media. People think, "Whoa, you're not looking at this, not looking at that." We look at everything, trust me. But what I'm doing is I'm stacking all these little tidbits on top of each other, much like when I was thinking a month ago, maybe we were due for banana peel. Now I'm saying that banana peel is maybe over. We're up and we're going to rally when everybody didn't think we're going to, because the world was ending this time just a couple days ago. Okay, this is cool, big stuff from an advisor point of view. We had 2 of the quickest bear markets ever to start this decade. That was rough, right? Pandemic, 22. Terrible time for investors, obviously, to start this decade. But that pain of less than 2 bear markets starting within 2 years of each other has never happened before. So I guess a better way to put it, we just had the 2 closest bear markets ever. Could another bear market have started on February 19th? Well, stay tuned. We'll see. But that would be 3 bear markets starting within 5 years of each other. Never happened before, as you can see here. And I get it. There's asterisks all over this stuff. 2011, we were down 20% intraday. Didn't close there. 2018, 20% intraday. Didn't officially close there. So there's different ways to look at this. But I think it'd be very rare, incredibly rare, to say a bear market's going to start right now on February 19th and go into one, because we've never seen 3 bear markets that close to each other. And this is one that always fires people up, and it probably isn't as important for this crowd, but I like the example of when you miss the best 10 days or miss the worst 10 days, what happens? Well, what we found when I work with people all the time, advisors, you have these big down days and people sell, right? And I'm talking more buy and hold here. I get it. But that's what happens. The best days and worst days, take a guess what happens. They're clustered together. Friday was the best day of the year. Monday was the worst day of the year. That's not. And normally the worst days happen before the best days. That's just how it happens, okay? So working with clients, they always want to sell after the worst days. We're like, I don't know. You might want to hold, because as I show here, since what I go back to, 2000, S&P's up about 10% a year. If you miss the best 10 days, that drops to negative 12%, down 20%. The last 2 years are up 23, 24%, drops to 4%. And I get it. Well, Ryan, what if you miss the 10 worst days? Or what if you trade? There's some potential flaws with this, but from a buy and hold, or at least a more strategic point of view, like we kind of look at the world, we would suggest don't panic after some bad days, because there could be good days coming very soon. I think I'm almost done. Things you don't see at a top. The Economist has President Trump literally setting money on fire. Okay, that came out last week. All right, that's pretty negative. Our friend Harry Dent was in the news again saying stocks would fall 99% last Friday. Last Friday, Harry Dent said stocks are going 99%. We just had the best 2-day market breadth we've seen in years. I don't know if it's coincidence. Put the call ratio spike, the AAII. There are flaws with this one. I get it. But 3 weeks in a row above 55% bears. The only time we've seen that in history is the March 2009 lows. Okay, so there's a lot of, and just the anecdotal stuff. I know you guys do this for a living. I do it for a living. I have heard from people in the last 3 days that I used to live with or live down in Charlotte for years, haven't heard from them for years. And they're reaching out, telling me how bad everything is and how the end is near and I should sell everything and what should I do? And I'm just that internal thing that we all do. If you do this for a living, I'm like, wow, there's a lot of bad news priced in. There is a lot of bad stuff. If we get any good news at all, and maybe it started with this breath thrust, we could be doing okay. I think it's the last one. Yeah, last one, more technical. I hear the word stagflation a lot. Growth scare, yes, we're having a growth scare. Growth is slowing down a little bit. Maybe we grow 2.1, 2.2% this year versus 3% on GDP. Okay, maybe earnings are hit a little bit. Yes, those are growth scare, not a recession. But stagflation, what I'm sharing on the screen on the left is wages, right? Wages are actually going down a little bit. That's okay. I mean, wages are still solid, but inflation comes down, wages come down, and oil on the right is the lowest it's been in a long time. So to us, you're not having stagflation when you have wages going lower and oil down there. If oil gets over $100 a barrel, yeah, maybe we will. And then the other thing, obviously, is wages going a little bit lower. So, guys, those are what I wanted to share. I think I stopped sharing my screen. I don't know. What do you think?
Fantastic.
Yeah.
Great stuff.
Talk March Madness. I mean, whatever you want to talk about, man.
No, lots of thoughts here.
Yeah.
And,
Yep.
one thing is the world is definitely not ending, which we've been arguing is the world is actually on fire here with
Yes.
Europe making new highs and China making new highs. I want to know, and obviously I'm throwing you under the bus, but you're the stat guy there. Is this normal? Have we seen this before where you've got the US really the only markets right now that are really getting hit hard and the other markets are really, get outside North America, they're doing really well. I mean,
Really
obviously when you get the great financial crisis, everything was collapsing. When you get, you get these periods of COVID, everything is collapsing. This is not what's happening here right now.
Yeah.
So thoughts there, just, on the strength in China and the strength in Europe and the strength in non-North American markets.
Yeah. So India and US are the two weakest markets. I work with a really smart, awesome guy named Sonu Varghese, do a podcast with him, Facts versus Feelings. He's from India and he lives in the US. I'm like, Sonu, you're just bad luck this year. That's my joke to Sonu, because India and the US, and believe me, he thinks it's funny. It's not offensive. But anyway, so US and India are the two markets that aren't doing very well, but just about everywhere else you look, we're seeing that. I think a lot of it has to do with the dollar, right? The dollar, I remember it started this year saying the contrarian trade is a lower dollar because everybody told us the dollar had one way to go, and that was higher. And that's happened. And now we've seen some assets flow out of the U.S. into the rest of the world. But to specifically answer your question, no. I mean, I was looking at some of this stuff. I mean, this is the widest margin the first, 2.5 months into a year. That Europe has outperformed the U.S. like ever, right? I mean, now 16 years, the U.S. has pretty much outperformed Europe every step of the way. The models, the money, our team manages about 2.2, 2.1 billion, depending on the day and depending on how the market does. We came into this year more even weight developed international, underweight emerging markets. We're still not sold on China. Now, listen, I know China's ripping, so I get it, but we do have a decent amount of international exposure, specifically Europe and IFA. I did see Warren Buffett's buying more in Japan, by the way, just yesterday. He's been buying Japan for a while, so there you go there. But I think this diversification theme works. Like we run models. We can kind of do whatever. Unconstrained is what we call them. Unconstrained models. We were, as you guys know, I came on with you for a while. In 23 and 24, we're talking 90, 95% to equities, okay? Because we can do what we want, go 0 to 100. Most of that was U.S. Over late last year into this year, we've started tinkering with that a little bit. We added some more gold after the U.S. election. The dollar soared and gold got killed. I like to buy things getting killed in bull markets. We added some treasuries for the first time in the 2.5 years I've been here. Late last year, added some tips about 5 weeks ago, so we thought yields would go lower. So we're doing some things in our models. It is not just so over the top gung ho. Let's be Super Bowls, because we were for a while. But I think diversification is the name of the game. And I look back at 2017, probably more to get to your question here, Dennis. I just talk a lot. Who knows what I'm really going to say? Good. But 2017, Trump wins, right? Dollar's supposed to go higher. Rates supposed to go higher. The opposite happened. So you look back then, we had the U.S. did great in 2017. Don't get me wrong. But the rest of the globe did even better, right? When that dollar was weak. So that's some things that we've been thinking about, why we've been kind of dipping our toe. Now, the big thing about Europe, do you go in right now? Oh, geez, with the rip it's had, I don't know. But we're talking actively about maybe adding a tad more on any potential weakness. But that's how these things work. We've looked at the history. They don't give you time to get in when they start breaking out, starting to move forward. So I'm just glad we have some international exposure here in the money we run. But yeah, 2017 is the closest thing I can see. But at the end of the day, in 2017, U.S. caught up with a lot of the rest of the globe. And that's kind of what we think is going to be the play here. But yeah, some great questions. But just diversify. The word of the day from a portfolio point of view. And if you do that, Treasury's up 4% for the year. Gold's up, I don't even know what now, 12 or 13% for the year. We know Europe's up a lot. Yeah, the U.S. is down. But, as of I don't know. Yesterday, even better. But as of Friday, 7 of 11 sectors were higher on the year. Yeah, it's, tech, communications, Tesla. You guys talked about that before it came on. Thank you. Communication, discretionary is lagging. But a lot of other groups are still okay this year. And that's, again, why you don't just chase a shiny object. I've said for a long time, we're more neutral tech. People looked at me like I had 3 eyes saying that last year. Well, this is why we were more neutral tech. We didn't have an overweight to large cap tech because we thought something like this might happen, and here it is. Maybe there's better values now. This is why, again, you kind of rebalance and diversify and do all those geeky things that people talk about because it works.
Hey, Ryan, great presentation, and I really like
Thank you.
your weight of the evidence approach. So you just brought up tech a little bit. Just
Yeah.
going back to the U.S., considering tech is such a large part of the S&P, it's roughly 30% of the S&P, and looking
Mhm.
at like what happened yesterday, until that
Yeah.
that buy program hit in the afternoon, most of the Mag 7 stocks were down except for Netflix.
Mhm.
And I've kind of in that boat too, or in that camp too, that perhaps tech underperforms a little bit. Do you
Mhm.
think that the rest of the market, there could be leadership and just the overall market with tech lagging? Do you think that will still bring up the market? Kind of like also looking at the Dow as well versus
Yeah.
the S&P, which is a little bit more diversified. Do you think that the rest of the names groups can power the market higher with tech lagging?
Mhm. Well, you ready for this very specific answer? It depends. I'm teasing, but no, I mean, if tech truly gets obliterated, like, and I'm not saying it's going to, I don't think this is going to happen at all. Early 2000s, of course, it's going to pull the rest of the market down. But we think tech can just kind of maybe now it's had its underperformance. Maybe it can be a little more even weight now. It can kind of hang in there a little bit more. I really don't think it's going to lead, going forward next 6 to 9 months. I think there's still some kind of some just little bit of air coming out of the bubble, so to speak. But we've seen the market hang in there. I mean, I know you guys talk about this stuff, but a lot of people don't realize technology underperformed the S&P 500 last year. Okay, I'll say it again. Tech did worse than the stock market last year. Now, I know it was like 23.5% versus like 23.3%. I mean, it was a real small margin. I get it. But the fourth quarter last year is when we started to see this underperformance out of technology. So this is really nothing new. And we are encouraged by the rotation. I know financials did great, and then financials were crushed a couple weeks ago. Well, that's another sign. Maybe they're shooting all the leaders, and that's how you get the bottoms. Now, we still think financials are going to lead. We like those industrials. We like a diversified portfolio. We've got a 4% allocation to gold in our tactical models. There's a lot of other things that can do well, and we're seeing it right in this world. But specifically, yeah, I think market can hang in there. Tech just kind of it starts to play. Catch up's the wrong word, but just kind of meanders along, and maybe doesn't have to lead, but it just can't lag by a wide margin. Because obviously you got tech, then you got communication services, cousin of tech, right? I mean, then you add those two groups together, you're talking a huge part of the stock market. Obviously, we'd be in trouble if they just really, really lagged. But if they did, that's why, again, I think you want to look around the globe and look at other areas, look at tech in other countries. Well, you know why Europe's up so much? You don't have a lot of tech. You know why China's up so much? They got some more tech, I guess, but not a ton. I mean, it is what it is. That's why some other parts of the world are doing better than us, because they don't have a lot of tech exposure. So that's kind of how you can.
Ryan, before I let you go,
yeah,
the market is a forward-looking indicator, correct?
Okay. Yeah, I think so.
And looking forward, I see some big obstacles.
Mm-hmm.
And I'm not going to go into stagflation camp, or I can't even throw out the R word yet.
Mm-hmm.
But if you look at the combination of things that are going on, tariffs, inflationary,
Mm-hmm.
reduction in jobs by the U.S. government, recessionary, reduction in government spending, recessionary. How can you have, with those three factors still weighing on the market going down, the market trying to tell you there's something coming in view of, because you didn't mention tariffs and you didn't mention government cuts, you didn't mention, I mean, how can this economy and this market continue under the current circumstances?
Oh boy, leave with a tough question there. So the other thing, I mean, just the terrible news out of the Middle East. I mean, markets are hanging in this morning, but geez, I mean, if that escalates, again, it's only we kind of diffuse some of that, and so that's the other real wild card floating out there. I think what we're seeing is a that's the word I'm looking. I got up really early today, so CNBC reevaluation of recalibration. Maybe that's the word, recalibration. That sounds good. I didn't have one beer yesterday. I swear, it was St. Patrick's Day, so but I did. I look at my hat. I'll put my hat on for this question. This is my St. Patrick's Day hat. I wore this yesterday. It's a day late. I'll wear it again. Hopefully you can see it there. There it is. There it is. How do you go like that? Anyway. Quick to the question. I think it is some values. We're looking at the things slowing down. I mean, things are slowing down. That is factoring in potentially slowing down, right? I mean, like I said, we came into this year thinking maybe 3% GDP growth, maybe 15% earnings. We're saying probably more like 2.1, 2% GDP, and maybe you're talking 10 or 11% earnings growth. But the big question is, are we going into recession? Is there going to be this big disaster coming? We don't think so. I mean, I know you guys told me this. I look at this. The credit spreads. I mean, yeah, we saw a little bit of widening out credit spreads, but credit spreads are not showing as much stress as they did back in August, right? Well, last August, the yen carry trade unwind. So we're just not seeing those major breaks. And you mentioned jobs. I mean, initial claims have been going lower. I know a lot of stuff's coming with the government cuts. I get that. Look in history, we have seen government cuts before. I mean, there's a lot under Clinton and even Obama that did some. So it's happened. And I'm not saying this time is different. I know it's unfortunate. A lot of people are going to lose their jobs and uncertainty that comes with that. At the same time, I think it's more of a slowdown, and it's again, kind of what you see the first half, to be blunt, of a post-election year 2, where markets are choppy, headlines can be scary, slow down. But I guess I'm still on the train that America's going to resolve. We're going to figure some of these things out, and the bull market, given what the last comment, we're all message of the markets guys. I have a CMT, John Murphy, got the book like right over there, message of the markets. Well, the markets just told us we might have had a major low in the middle of March. The markets told us all the bears were puking. The markets told us how negative everybody was, rightfully so, with those scary headlines. And maybe now we're on the other side and we're going to surprise a lot of people and just go higher. Market doesn't need to go up on bad news or good news. Market just doesn't need uncertainty. So you need a little less uncertainty, and I get it. It's out there, but I think we're still going to start to see some on that trade front. April 2nd is the big day. April Fool's Day is a good one. April 1st, but April 2nd is a big day when those tariffs come in play, and there's still some time to, let's hope, get some, hope's not a strategy. I get it, but to get that, and just know April's like by far the best month of the year on average. That, whatever is down last year. April's down last year. Like every other month was up last year except April and December. But still, April's usually a pretty strong month. So we'll see how it all shakes out, guys. And I look forward to coming back talking about it. And I look forward to seeing Xavier beat Texas on Wednesday night and have some fun this March Madness. So good luck to everybody's brackets.
All right. Ryan Carson, we all know him, Chief Market Strategist at the Carson Group.
Thanks, guys.
Killing it once again. Thanks a lot.
Mm-hmm.
Thanks, Ryan.
Thanks, Ryan. Oh, okay. So much to chew on there. So much to chew on. I just would sum up. The answer, to your question is, how we solve all those is Trump backs off. It's dependent on Trump. If Trump gets more aggressive in his tariff policies, if the reciprocal tariffs do come in on April the 2nd, I think the market retests the lows. If he backs off and says no reciprocal tariffs, the market can rally from here. So it all depends on what Trump wants to do. It's all up to him. If you were inside Trump's brain right now, you would know exactly what to do. Unfortunately, we're not, but that's your answer to your question. This all turns around just like that if Trump backs down.
I really like the point about high yield credit spreads. We know that there's uncertainty on the tape and there's a bit of headline risk, but where you can kind of, I like going through some of the stats. Joel has called Ryan the stat man, which I like a lot because he does whip through some of those slides and really kind of giving you again a great like weight of the evidence approach. But I mean, if there was truly something that was going wrong in terms of stress in this market, credit spreads would be blowing out. And they're not right now. I mean, they're very subdued. We're not even above the credit spread level is not even above where we were last summer. So until we see some type of stress in this market, maybe in the fixed income market or someplace else, I'm in that camp that this has just been a traditional pullback, which we have every year. But I also think that there could be new leadership too. And that's what I'm kind of on the hunt for.
I like the new leadership. I like the thoughts of diversification. I like lots of things that were taken out of this show from Ryan and from Christian here. That's what I'm doing on pullbacks, just like recently. I'm not diving into all those same names that we've been playing for the last, 5 years here. What I did was basically buy, the Canadian equivalent of EEM. I took literally a huge chunk of my portfolio that I had sold out of some stocks, recently and put it into that. I mean, I just think, diversifying away from ground zero of like what we don't know is what's happening here. And maybe that's going to be a mistake. And maybe US is going to continue to be the best place to be. It's been the best place to be for a long time, but you're also paying for that best place to be. And as much as, we've been talking about the value year in US stocks, it's also the value year around the world, because the one thing that Europe has, China has, and a lot of these other countries have are lower multiples. So I think there's a little bit of that value play saying, hey, I'm not going to pay 45 times earnings for Costco. I'm going to go pay, a cheaper multiple somewhere else.
All right, tomorrow we got a good one coming tomorrow. Sorry we missed the ticker time today, but a new guest is going to be coming on, a very appropriate time to have him on. Matt Bryson, Managing Director over there at Wedbush Securities, covering the enterprise hardware sector and Nvidia. All of our favorite stocks. Nvidia will be talked about. Taiwan Semi, Super Micro. You be here with your symbols to talk to Matt Bryson. All right, good to be
Just
back.
hold on. Just hold on. You're jumping the gun. We had an important. Josh has informed us we had an important thing to do today, and you're going to drop the ball on this here, Joel. So tomorrow, we have a huge surprise for all of our pre-market prep listeners. We have a new website that we're going to be dropping tomorrow. So it's going to be launched tomorrow. It's going to be exciting. We're going to have so much more content, so much more interaction with our listeners. Dropping tomorrow. As long as everything goes well, it's going to drop tomorrow. We're doing a lot of testing on our new website here today. If all those tests go well, tomorrow we're going to be dropping a new website. We'll let you guys know on pre-market prep. I don't know if you want to add anything to that, Joel, but we're really excited. We've been working on this for the last 5 months here at pre-market prep. Obviously, ever since we left Benzinga, and we're excited for this. So stick around.
I was just going to say one thing that I get a lot of feedback from people over the years and stuff, and the main thing that I've gotten is like, we need more content. We need you guys to be on your thoughts, talking the market, breaking news analysis, more. And that's what we're bringing to you, along with the other education videos, the other things that's coming your way. Been hard at work for it. So you're just going to get it,
We hope all the testing goes well today on the new site. And if it does, we're going to launch the site tomorrow. And hopefully no bugs, no hiccups. And we'll let you guys know.
What a great day to do it on Fed Day, too. A lot of
Fed Day.
Yep.
Yeah, and on this new site, we'll be able to take you right through the Fed meeting. So it's going to be a lot of fun. We're really excited.
Okay. All right. We'll see you guys tomorrow morning.